Hello and welcome to the day ahead. It's Thursday, the 3rd of November. I'm Andrew Gagan. Well, it was a volatile session in the US with stocks on Wall Street turning negative on comments from Fed Chair Jerome Powell.
Let me say this, it is very premature to be thinking about pausing. So people, when they hear lags, they think about a pause. It's very premature, in my view, to think about or be talking about pausing our rate hike. We have a ways to go. Our policy, we need ongoing rate hikes to get to that level of sufficiently restrictive, and we don't, of course, we don't really know exactly where that is. We have a sense, and we'll write down in the December meeting a new summary of economic projections which updates that. But I would expect us to continue to update it based on what we're seeing with incoming data.
Well, the Fed lifted its key lending rate 75 basis points as markets had been expecting to take the target Fed funds rate to between 3.75 and 4%. Equities initially rose as the central bank reiterated that ongoing increases in the target range will be appropriate. However, stocks reversed course sharply when Jerome Powell explained the Fed's decision-making and the path ahead. He said the ultimate level of the Fed Reserve benchmark policy rate is higher than previously estimated. However, he said there is significant uncertainty around the level of rates needed to bring down inflation, saying we still have some ways to go.
Has the window for a soft landing narrowed? Do you still think it's possible?
Has it narrowed? Yes. Is it still possible? Yes. I think we've always said it was going to be difficult, but I think to the extent rates have to go higher and stay higher for longer, it becomes harder to see the path. It's narrowed. I would say the path has narrowed over the course of the last year, really.
Meanwhile, in the latest earnings reports, Advanced Micro Devices edged higher after forecasting some strength in its data center business, but then subsequently came off. Smartphone chipmaker Qualcomm forecast first quarter revenue and profit below estimates, with its chip business hurt by slowing global demand for mobile phones. Airbnb tumbled after reporting a record $1.21 billion profit for the third quarter as bookings increased. However, the profit and bookings were both less than Wall Street had expected. E-commerce company eBay forecasting holiday quarter revenue below estimates as consumers rein in their spending for gifts as the cost of living rises. And oil and gas producer Marathon Oil reported a jump in third quarter profit as it benefited from a surge in crude prices. Well, in US economic data, the latest employment report illustrates the resilience of the jobs market, with 239,000 private sector jobs created in October, well above the 195,000 forecast. The pickup in private hiring was concentrated in the services sector, in particular the leisure and hospitality industries. And mortgage applications fell by 0.5% in the past week, having fallen 1.7% in the previous week. US Treasury yields moved higher after the Fed chair indicated that the central bank is yet to decide when it will scale back its rate hikes, the 10-year rising to 4.08% and the 2-year at 4.6%. And the US dollar seesawed against major currencies as the Fed's rates decision unfolded. The Aussie dollar initially jumping to 64.9 cents, but has since weakened. Well, the Australian share market is set to fall sharply in the wake of the Fed's outlook. ASX futures currently down 1.6%. Global oil prices have continued to rise. Brent crude up more than 1.5% as US inventories fell. Iron ore futures jumping more than 2.5%, while base metal prices were mixed. Nickel rising a further 2.3%, and the gold futures price edged higher. And the crypto market followed equities and dropped sharply, with Bitcoin trading just above 20,000 US dollars. And on the data cards today, UK monetary policy meeting and China's PMI. And locally, Domino's Pizza out with earnings guidance saying it expects materially lower earnings in the first half of 2023. That is your day ahead. We'll see you again tomorrow.